Good morning, treasurers. After being out of action for a few days, I'm back. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 12th July 2021. In the international market, there is a lot of volatility in the US 10-year benchmark. On 1st July 2021, US 10-year was at 148, and on 8th July 2021, a week later, US 10-year was trading at 130. Finally, on Friday, US 10-year closed at 137 and 30-year closed at 199 percentage points. Reason for these wild movements in the US yields? Investors are not sure. Now, given not so promising unemployment data, raising questions on economic recovery due to the fear of COVID variants. In the crude oil market, crude is trading at $75.63 per barrel. Short-term range for crude is 75 to 80 with a target of 80. Did you know that in July's OPEC Plus meeting, there was a disagreement between Saudi Arabia and UAE? OPEC Plus, as per their initial plan, wants to increase the oil productions gradually till December, supporting the oil prices. But UAE wants to increase their oil productions as soon as possible, which other OPEC Plus countries are not agreeing to. Hence, there is a clear crack in OPEC Plus nations, and investors are fearing that there will be few more countries which will join UAE for increased oil productions. This is definitely not a good sign for bullish oil investors, but definitely a good sign for countries like India who depend heavily on oil imports. In the currency market, dollar index is at 92.09. Today's range for DXY 91.94 to 92.34. USD CNY or Chinese yuan is at 648. USD INR with a high of 74.68 closed near day's high at 74.64. USD INR's range for today seems to be 74.30 to 74.80. Watch out! Larger IPOs coming out this month which would attract foreign funds via FPI route. Trading strategy for USD INR, it seems 74.30 has a good support for USD INR and is trading above the level. Upside seems capped at 74.80 without any new material information and discomfort for RBI. USD INR will be range bound, but have a keen eye on DXY closing below 91.94. In the domestic market, the most sought after event in Indian bond market was new 10-year benchmark auction on Friday. As RBI gave 610 as cutoff for new 610 GS 2031 benchmark, it sent a clear signal to the market that RBI is ready for gradual higher yields. With this higher cutoff for 610 GS 2031, 585 GS 2030 closed at 619 versus 612 the previous trading day. 563 2026 closed at 573 versus 570 the previous trading day. What could be the reasons for RBI's comfort for higher cutoffs and higher yields? Number 1, elevated inflation, CPI at 630. Number 2, expected increase in supply of dated securities. And reason number 3, higher global commodity prices, crude trading at 75. The trading strategy for Indian bond market would be, remember we had clearly advised all of you to clean up your 585 GS 2030 positions. Since then, the yields for 585 2030 have risen by 14 basis points. As the CPI data is awaited today, do not venture out to build any new fresh long positions. Knight Research team expects the CPI to be at 673 and above, and hence there won't be any enthusiasm today for secondary market trades. Trading range for 610 2031 to be 609 to 612. Watch out! CPI data after market hours today. Expectation for CPI today is 670 to 685 versus 630 for last month, June 2021. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.